Our next guest says Tesla, the stock, will go up after it reports profits next week. Andrew Left, Citron Research founder, is our guest today. Andrew, welcome back to the show. Always good to see you. So what's so good about the earnings report that will get Tesla's stock up again? What is it?
I mean, you can't really say what's going to be good about the earnings report, but we know one thing about Elon Musk. Whenever he says anything good, something bad might happen. Whenever he talks down the company, as he has in the past few weeks, you could look for something good. So I think the demand is still there for the car. I think the cash flow is there. And I think the body language by management, if you read through it, when he's been talking things down, probably means he puts up a good number next quarter.
But he's got to pay out a lot of money when these bonds come due. Doesn't he have to have the stock at like $350 per share? And if it doesn't hit that level, he's got to shell out a couple of billion cash. Isn't that the situation?
Yeah, no doubt. I mean, it has to be around over $350 a share for it to convert. And if not, it'll eat right into the cash flow. But if the company's producing that much cash flow, that's a part of business. It'll eat into it. But we'll see. I mean, he's promised the amount of cash flow that will service the debt.
Does he have the money?
If they put up a good quarter, that's expected, yeah. And it just seems to be, when he starts talking down the stock, you have to look at Musk and look at over the years what's happened. When he talks down the stock, something good's going to happen.
Do you buy it? Have you bought it already?
I owned it a few months ago. I'm long the stock, small, not a large position.
Okay.
Obviously, it's a speculative stock, so I wouldn't suggest anyone make it a large position.
Now, what's this about Restoration Hardware? You say it's going to see a better than 100% return in the next 2 years, doubling, in fact. Yeah, actually, when you made that claim, you moved the market.
Why not? I think it's the claim itself that moved the market. If you read the report, it's extremely valid. Imagine a company with zero competition in its space. It's an amazing thought to think no competition. It's a high-end retailer lifestyle. They're getting into hospitality, dining. It's a luxury platform. It's amazingly cheap. Analysts are still comparing it against Lazy Boy or Ethan Allen, and it couldn't be different than it. It's exciting. It's a wonderful concept, and it's relatively inexpensive considering it has not gone international yet.
Let's talk about Twitter. I understand that you believe Alexandria Ocasio-Cortez has made Twitter more, as you say, female-friendly. Is that a reason to buy the stock at 32?
Well, I put out a note a month ago that I was very concerned that a report was put up by Amnesty International discussing that Twitter is very anti-women, filled with hate speech, and a platform to be that maybe advertisers shouldn't gravitate towards too. What's amazing about AOC is what she's done is she's taken that argument and thrown it on its head. Whether you like her or not, all politics aside, it's the fact that she chose this as her platform, along with the president, more validates it to millennials, to a different generation of users, but most importantly, it will embrace advertising dollars and quells the concerns that the Amnesty report brought up last month.
Andrew, that is fascinating. You are an original thinker. You're a valuable guy. Talk to me about Facebook, because the last time you were on the show, you said buy it in 2019. You still feel that way?
Well, actually, I put out a report about buying Facebook at around $128, I think, a month ago. And the truth is, Facebook is still relevant. My son is in the studio right now. He doesn't get off his Instagram. People still use it. Advertisers. And anyone who's a parent knows that. Advertisers value from it. I get the fact that it was evil, but what's interesting is this year, that evil Facebook, it was trading at a cheaper multiple than Philip Morris. And if you want to call Facebook evil and Philip Morris not evil, I think we have to check our values.
I don't think they're evil. I just think they're Big Brother. I've got a real problem with Big Brother. But again, all politics aside, you go straight at it there. Now, how about Netflix?
It's business. This is just business.
Yeah, exactly.
Well,
it's just business.
And Netflix is the opposite. I understand people love their Netflix. Netflix, unlike Facebook, is not a platform. They have to make shows, recreate shows. And for somehow, they seem to be that just because they can expand their pricing, the stock will go higher. They still lose a lot of money. I think this will be the year that we will gravitate towards companies that make money, and these high-growth companies that lose money will fall out of favor. So I know right now everyone's all giddy that Netflix can raise pricing, but when you sit back and realize that they must consistently make those shows and burn that cash. The trick doesn't seem to be as valuable as people are presenting it right now.
You know, Andrew, I really like it when you go through some of these big-name stocks and give clean-cut opinions about where the market is going to take them. I also like it that you don't care. I don't think you care about the government shutdown, about China trade, or the Federal Reserve. You don't care that much, do you?
I mean, the point is, as someone in the stock market, I can't handicap when China is going to be resolved. I can't handicap what the effect of the market. What you try to do is you find good companies and you buy them, or you find companies that eventually, bad companies, I say bad companies, not bad, overvalued companies that will go lower. You can't handicap politics.
True, you can't.
That's way out of my pay grade or anyone. We can hope for resolution, but you know, of the China issue, but I think the companies right there will look through it.
Can I try you with this one? Everybody knows I do own a little bit of Microsoft. Okay, I've owned it for years and years and years and years. I've just let it ride. I've done well. Should I sell it?
I mean, amazing management, Microsoft. What an amazing job that they've done. The only scary part about Microsoft to me is that the level of complacency among shareholders, everyone just looks at it as like an annuity. It's that safe.
Sure.
And historically, in any stock that we've had that feeling, something dangerous around the corner. But that being said, that's just a sentiment, but it really is owned by a mass ownership who just looks at it as just being a rock.
Okay. I think you got it right. There's the one-year chart, and I'm doing well. Did you just call me a genius? Yeah, I think you did. You're coming back, Andrew. You're on your way back, lad. No question about it. My best regards to your son there, too. Andrew Left, good man. See you soon. Thanks, Andrew.